Hello traders, Gary Wagner here just before 12 noon in Honolulu, 6 o'clock in New York. It is Monday, last day of the month, September 30th, 2019, and this is the daily report for gold and silver. A tremendously sharp sell-off in the precious metals today with the exception of palladium. All of those markets going down fairly hard, and platinum actually losing over 5% in trading today. I believe that the round of selling we witnessed today in the precious metals had a little bit to do with dollar strength, a little bit to do with the fact that we had a slightly higher U.S. equities market, so a small aversion to safe haven asset in terms of that class. But the majority, traders, I believe, is directly attributable to technical selling as we go into the last day of the month and the last day of the quarter. Those that had profits pulled it. Those that wanted to curtail losses also covered their positions. Let's take a look at current pricing as well as our technical studies. An extremely sharp sell-off in gold. We're looking at the continuous contract, this basis the December contract, down over $28, 1.87% decline at 1478.30. That is a pretty strong move, opening right around the 50-day moving average and breaking far below that. On today's show, we will detail which particular corrective pattern we now favor and where that could take gold pricing, because today's strong downside move definitely eliminated the possibility that we in fact would see a horizontal triangle. As you can see, the break between the morning session in New York and then overseas has just begun. They have readjusted where they believe it's settled and is now showing up about $6 at 1278, 1279. When we take a look at the dollar was strong today, up about 0.3%. And when we look at silver, that had a pretty severe decline. But as you can see, it is currently trading just above $17 at 1707. Let's take a look at our technical studies. We were talking over the last couple of weeks about potential corrective patterns that we could identify, and as more data came in, we suggested alternative patterns. We started with the most simple and prevalent of those corrective types, which is simply called an ABC correction, in which you have two primary waves in the direction of the correction, which is down, of course, when you have a bullish market. That would be, of course, the A wave, and then the C wave. That is divided by a counter wave. That counter wave goes opposite the direction of the correction and actually in the direction of the current trend, and that would be your B wave. Last week, we looked at the possibility that we would have a narrowing of a trend and have basically a horizontal triangle. That, of course, was negated once we had this severe sell-off, taking the market dramatically lower, which tells us that there is an extremely decent probability right now that what we're going to witness is an ABC correction. And typically, in terms of where we think that could go, we have plotted that out, but we'll go through that for a little bit. In essence, the first of these waves took us to roughly the 0.23% retracement, and that, of course, is a retracement of wave 3. We then analyzed the counter wave B, which is typically anywhere between 60 and 75% of the ground lost on your A wave, and so that came in roughly at 1540. Then we went into our final C wave. That is the wave that we are currently in. And we got confirmation that that is likely when we broke hard today below the 50-day moving average, and definitely into an area we have not seen since this market traded higher and really held strong support at approximately 1492 to 1495. That being said, my target now becomes the 0.38% retracement. That is 1453. I believe there is a high probability that the current correction will conclude at that area. That would complete a wave 4. And of course, once wave 4 is complete, that would begin a 5th wave, impulse wave, which would be a final rally, taking us to highs above the highs achieved just at the beginning of this month, which were at 1565. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the next daily update and review. Bye-bye.